Hi everyone, this is SBS on the Money from the SBS newsroom for this Wednesday, the 9th of December 2020. I'm Ricardo Gonçalves. It is your daily 10-minute business and finance news wrap. Later, Australian shares hit a fresh 9-month high, but let's start with consumer confidence, which hit a 10-year high. The Westpac Consumer Sentiment Index rose to a reading of 112 points in October. Anything above 100 suggests optimists outnumber pessimists, and it comes amid better prospects for the vaccine, for coronavirus, and easing restrictions. So for more on that, I spoke earlier with Westpac senior economist Matthew Hassan. Matt, consumer sentiment is at a 10-year high. Why?
Look, I think clearly it's because of the success we've had in containing the COVID virus domestically. The big change over the last month, though, the big development has been around prospects for a vaccine emerging next year with the approval of the Pfizer vaccine and the Moderna vaccine and promising aspects around the AstraZeneca one. And I think that's given us an additional kick along. Sentiment rose a further 4%, and sentiment amongst groups that were most at risk to COVID, so health workers and the elderly Australians, was up particularly strongly, up over 20% in both cases. So I think this time around we're getting more confident that we've come through the virus locally, and prospects around the vaccine are looking much better.
So with confidence improving so dramatically, how is this recession different to the previous one and the slowdown we saw during the GFC?
Well, every recession is a little bit different, but what's really different about this one is that this is a shock associated with a health emergency. Most of the recessions that we've seen in the past are associated with the economy itself and the financial system in particular, and so that can mean that the process of working through a recession and working through those imbalances can take a lot longer. This time around, it's more about our health outcomes and the restrictions that were required to protect Australians. So once we get those under control, we're in a much better position to revitalise the economy, and we're sort of seeing that coming through domestically very strongly over the last 3 or 4 months. So the legacies hopefully won't be nearly as damaging as during previous recessions.
Labour market expectations have improved, but unemployment is still a problem and will be for some time, isn't it?
It will still be a problem for some time. So what we're seeing from the consumer is that the fears of job loss have definitely eased. What we're capturing is the consumers don't think that we'll see anything like the layoffs that we've seen over the last 4 or 5 months, 6 months really, and that the prospects for the labour market in general should start to improve. But that said, it's going to take a long time for parts of the economy to heal and recover from this shock, and the labour market is still going to be on balance weak with a legacy of high unemployment. But definitely the turning point has happened with consumers as far as their job loss fears.
So what are consumers saying about their finances?
Well, they're feeling much more comfortable about their finances. Their finances are not weakening in the same way they were a few months ago, and they're expected to improve in the year ahead. But around their finances in terms of their decision making, there's still a very strong air of caution around. So risk aversion. People are not quite as fixated on paying down debt, but they're still looking for safe options for their money, not convinced about the real estate market, not convinced about shares, and actually quite uncertain what to do with spare savings if they have them.
What do you see as the key risks to sentiment?
Well, certainly the key risks are still around the COVID virus. Prospects for a vaccine are looking better, but we could have setbacks on that front. And meanwhile, the outbreaks abroad are still pretty serious. We could see lockdowns occur, and I guess the biggest risk is still if we were to see yet another wave of the virus domestically, that could lead to problems. At this stage, that looks very unlikely, but those other risk factors around the virus are still very active abroad, and any sort of delays that might happen around the vaccine, I think those are the things that could really undermine sentiment.
Matt, just finally, given we've seen a sharp rebound in the economy and some upgrades or revisions from economists to economic growth and possibly from the RBA soon, is there a real chance that official interest rates won't stay on hold for 3 years as the RBA suggested?
I think that's very unlikely. I think the RBA has made a very strong commitment to keeping policy very as stimulatory as possible for a very long period. And I think at the moment, while these developments around sentiment and around growth domestically are looking better than expected, it is still a long way to recovery, and it will take time to really get that fully on track, and there's going to be some more twists and turns to this recovery yet to come. So I think the RBA is likely to sticks to its guns in terms of its policy position. But if we do get down the track and the economy is recovering better, if vaccine things run ahead, better than expected, then perhaps that might change some of their views.
Matthew Hassan there from Westpac. Of course, if consumers are feeling confident, they will spend this year because of COVID-19. They were spending online, but they're also donating money via the internet in greater numbers. Online fundraising platform GoFundMe says Australians made 1.3 million donations this year. That's a 30% rise on 2019. Donations to community fundraisers doubled, with Black Summer bushfire recovery funds topping $31 million in January alone. And there was also significant support for Indigenous rights causes. Now, the top fundraiser was the Help Save Kangaroo Islands, Koalas and Wildlife, and Australia's most generous city by number of donations per capita was in Queensland. It's Bundaberg. Let's go now to the Australian share market because it had 7 straight days of gains, no negative days so far in December. The S&P ASX 200 up 0.6% to 6,728. We're only off 6% from those pre-pandemic highs. CSL doing well today, up 2.2%, BHP 1.1% firmer. The banks were mixed though. For more on the day's action, I spoke earlier with Scott Phillips from the Motley Fool. Scott, the market's up strongly today. Why?
It's having a great day, Ricardo. This is really, I think, the extension of the optimism we're seeing right across the market. Business confidence yesterday, consumer confidence today. Very hard to find a pessimist these days amongst the ASX.
Iron ore prices, where are they going?
I don't know where they're going next. I can tell you where they've been, and that is up and up by a very, very long way, setting almost records, $145 a tonne recently, and the miners are doing spectacularly well. Fortescue going from strength to strength. I have a little bit of a concern, that is if you're getting something out of the ground for $15 or $20 a tonne and you're selling it for $145, that's a wonderful profit margin until someone comes and takes that away from you by adding to supply. In the short term, probably okay. In the long run, I want investors to be just a little bit careful because these good times may not last.
How much of that has got to do with that rally in the Australian dollar as well? Because we're seeing fresh 28-month high with the Aussie versus the US.
Look, it certainly helps in Australian dollar terms. Of course, the iron ore price in US dollars. So at the moment, the benefit coming to the shareholders and the companies themselves, of course, part of the Australian dollar story. The rest, though, is just an imbalance of supply and demand. The demand restarting really after the depths of the coronavirus pandemic. The question is how long that lasts or how long it takes supply to come on and take up some of that slack.
So what's behind the strength in the Aussie?
It's really a sense of weakness in the US dollar, moreover. It's very much a sense of investors looking for yield, the old yield hunt. Even with the Australian dollar so low, frankly, investors looking elsewhere than the US for opportunities. And the Australian dollar is benefiting from that. And as well, we remain that kind of Asian exposure trade, even notwithstanding the trade war with China currently we're engaging in, or part of, being maybe the victim of. It very much is that sense of Australia being the proxy for exposure to Asian growth and renewed growth, again, on the back of COVID.
And we're starting to see a lot more merger and acquisition activity, the latest being super funds moving and looking for something to buy. Why?
Yeah, look, the M&A growth is really, really important. It's an important sign of the market getting back to some sort of normal and frankly, some bargain hunters looking around. When it comes to the Infratil deal being purchased or hopefully purchased on Australian Super's perspective, it really is a story of the big super funds looking for more reliable and frankly, lower price cash flow. And when it comes to some sort of basic kind of, expectation of normalcy or stability when it comes to cash flows, the infrastructure assets are really great for that. Infratil on Australian Super's radar. We'll see much more of that. Companies being taken essentially private and run as whole businesses inside super funds in the years to come.
Scott Phillips there from the Motley Fool. That is SBS On The Money for this Wednesday, the 9th of December 2020. I'm Ricardo Gonsalves. You can follow me on Twitter and Instagram at Business Ricardo.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.